Amazon is scheduled to report quarterly financial results after the markets close on January 31st, 2025. That has investors curious if they should buy Amazon stock before it announces earnings or after it announces earnings, whether they should buy Amazon stock at all, and in general, just how to approach purchasing Amazon stock surrounding this volatile event that tends to move prices of a stock more than usual following an earnings release. So I'll address all those concerns in this video here. Also, I'll preview what investors should look out for from Amazon in the upcoming earnings release. Of course, beyond the obvious things like revenue and earnings per share, which I will also talk about. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, which Amazon updated on October 31st, they said that revenue increased by 11% to $159 billion. More impressively, operating income jumped to $17.4 billion compared with $11.2 billion in the same quarter last year. Amazon's profit has been surging in recent years as business continues to grow, and their capital investment, their spending, has been slower to increase, given that they did well during the pandemic to invest in the business, expand operations, expand the infrastructure to be able to handle this growth in the business without needing to further invest in the logistics, etc. Cash flow has also increased meaningfully, jumping 57% to $113 billion. Let me repeat that number again because it's so large. Amazon's operating income, operating cash flow over the trailing 12 months was over $112 billion. That's compared with just $71 billion for the trailing 12 months that ended September 30th, 2023. So in the matter of 1 year, Amazon's operating cash flow jumped by over $40 billion. Some businesses will go through their entire life and never generate this much operating cash flow. Amazon did that in just 1 year of growth. It's a truly impressive business. Management has done a phenomenal job, especially if you consider that they've been through unprecedented circumstances in the last 5 years. Going into and coming out of the pandemic was a truly challenging event for Amazon, and Amazon is one management team. I can think of maybe 12, maybe a dozen management teams that did an excellent job both during and coming out of the pandemic. There were businesses that did great going into the pandemic, right? Peloton did great when we were in lockdown, but then coming out of the lockdown or as the economy was approaching the end of the pandemic, Peloton fumbled dramatically, and its business is struggling to recover from that. There were companies that did great coming out of the pandemic, but then they were some of the ones that fumbled going in. Very few businesses handled both sides of that unprecedented event effectively. Amazon is one of those, and I give management credit for that. I can feel more confident handing over my capital to a management team that's demonstrated execution of that magnitude during such a difficult circumstance. I can feel good that over the next 5 years or 10 years or 20 years, if some dramatic event were to happen that hasn't happened before, some unseen event, some black swan event, the term coined by Nicholas Nassim Taleb in his book titled Black Swan and the following follow-ups to that book. If there should be some event of that nature, I can feel relatively confident that Amazon's management team can handle it well because they demonstrated how well they can handle unprecedented volatility in the business during and coming out of the pandemic. So that's plus points for Amazon's management team to be sure. Looking ahead, they are forecasting, Amazon is, revenue growth of 9% at the midpoint in the upcoming quarter, with operating income continuing to jump to a midpoint of $18 billion compared to $13.2 billion in the same quarter last year. So they're forecasting another $5 billion increase in operating income. How is Amazon managing all this? Well, partly it's the foundation the business is built on. This is a business that's built on economies in scale. It's already built the infrastructure to deliver items to your home. So if you're ordering items to your home regularly, like we are, we're constantly adding items to our Subscribe and Save, which is a great product that we love, saves us so much time and expense of shopping. And if we're already ordering items and our neighbor starts ordering items, now Amazon can make two deliveries in the same street where they're already deploying a driver with a vehicle. And so the cost to serve each of us drops considerably. And they've been doing that. Now multiply that by hundreds and hundreds of millions of new and incremental customers that are joining Amazon, and it's lowering their cost to serve. They're learning their customers, they're learning the customers' ordering habits, learning what products they like, adding products to their items on their website, and it's just been incrementally growing in this fashion, finding improvements, building on itself, and it's now grown to a level where it will be so difficult for any competitor to encroach on this business. Amazon has invested hundreds of billions of dollars in its logistics network. And not to mention the years and years of learning experience, the data that they've collected from these operations. Imagine someone else, another business, trying to build what Amazon has built. And so this competitive advantage is something that investors can rely upon to provide sustainable revenue and profit expansion for Amazon for a very long time. All right, I talked about scale, and you can see that in their segments, right? Their North America segment operating profit margin consistently positive. This was a segment that struggled to deliver consistent positive operating margins. Now they're regularly roughly around 6% operating margin in sales. The international segment, which took a long time to reach profitability, but it's 3 straight quarters now of positive operating margin in their international segment. And so now each incremental customer that joins will be cherry on top. They've already demonstrated profitability in the international segment, delivering items to people's homes. And then, of course, their most profitable, most lucrative segment, AWS, has re-accelerated growth from 12 to 13 to 17 to 19%. And these margins are the highest of any part of its business by a large margin, operating margin of 38% in its latest quarter for AWS. This is where the company benefits from its AI segment. So Amazon's business doing incredibly well. Now, should you buy Amazon stock? Well, it's now trading at a forward price to earnings of 30, which is around the midpoint where it's traded for in the last year. It was more expensive momentarily. It was cheaper in sometimes. At a forward PE of 30, it's about the middle of where it's been. And I've felt that this has been an undervaluation for Amazon stock. So I've had Amazon stock rated as one of my top 9 stocks to buy this year in 2025. I've had Amazon stock rated as one of the top stocks to buy in 2024 also. And so the question of whether or not Amazon stock is a buy or not, I'm answering it right there. Unequivocally, I think this is one of the best stocks to buy this year. Now let's talk about timing. Should you buy it before earnings, after earnings? How should you allocate your purchase? If this is a big concern of yours, the safest thing I like to recommend, which reduces the risks of both sides, is to buy half of your allocation before earnings and half of your allocation after earnings. That way, you reduce both sides of the risk. You reduce the risk of missing out, and you reduce the risk of losing a lot of your money. Sometimes, in rare cases, I feel the undervaluation is so much that you can buy all of your allocation before earnings. I don't think that's the case here. I do think Amazon stock is undervalued, but not grossly undervalued where I feel like you just got to go in and buy as much as you can before earnings. I think the undervaluation is not extreme enough for that. So that's my recommendation there. half before and half after earnings.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.